What happens if we do see an increase or a move up in the timeline of a rate raise from the Fed? Or what happens if the 10-year goes up? We're starting to see inflationary, trends getting haywire. Not that we haven't already seen that a little bit, but people start to buy into the fact that it's not transitory. What goes on then? One area that you really want to take a look at, in my opinion, I think that this is certainly a very important area to look at. And this could be the financials. We take a look at the XLF, for example. We take a look at the XLF, for example, and it's obviously having a really good day today, but it's corrected quite a bit. Now, if you're a bank that basically makes their money off of interest rates, especially when it comes to loans towards businesses and homes, mortgage rates, all that good stuff, you're going to benefit from a rate raise, from interest rates going up. So the XLF is a financials ETF, so it's tied to the financial sector. You got heavy hitters in here like JP Morgan, Morgan Stanley, Goldman Sachs, Bank of America, Wells Fargo, all those guys. They're in here. So you can pick a bank out if you want, but if you just want exposure to the industry, take a look at the XLF. This has done extremely well at holding support at $36. Extremely well. I mean, I had this $36 support marked way back here, and it has done nothing but hold up since I had that area eyed up. We had a couple of fake outs here, but it popped back right back over that mark and has held over 36 remarkably well. This has had a huge breakout. If you guys recall, I've talked about the XLF and the financials since January and mentioned that we were going to see a huge breakout on this. Let me zoom out for you, just kind of give you perspective. And we're going to go to the weekly chart just to kind of give you an idea of what I was looking at, in the beginning of the year. February of 2020, it came up to this area around 31. And then obviously we know what happened after that. And then it came back up at the beginning of this year, retested that support. And I said, hey, watch this area. We're going to see a massive breakout if we get it above this resistance. And it did. And it's continued to break out as we are seeing the economy get back on track. And now we're hearing, that the Fed's going to potentially start raising rates at the end of next year. And we're getting this taper talk happening. So the XLF is definitely going to be, and just the financial sector in general is going to be an area that you may want to keep your eye on. Could be an area that you want to, park your money. Now, what I will say is, and a lot of people might be rolling their eyes, this isn't sexy, B. It's not sexy, Brad. Who cares about owning stock in Goldman Sachs? Goldman Sachs is up 50% this year. I don't know how, what do you want? And it's Goldman Sachs is going up 50%. Nice and steady, by the way. Hasn't been like these AMC moves that have just gone all over the place and you're looking this way and that and wondering which way is up, right? It's been a nice steady move. And I'll give you an example. I'll show you the chart here. And I think that these banks are going to continue to rock and roll going into next year because if interest rates go up, they're going to benefit greatly. So let's say Goldman Sachs, in my opinion, is probably going to be the bank that I actually own Goldman Sachs personally. So full disclosure, I do own it. But there's a reason for this. I think that the small exposure, the lack of exposure that they have to the housing markets and that they're more focused on trading and investing side of things, I think definitely helps them. The interest rate side of things is going to also continue to benefit them just as much as it would anybody else. So we look at Goldman Sachs, for example, working our way back up to resistance at around 393. If this goes back up over that, which I think it will, not only is this a technical resistance, but it's also right at the 50-day moving average, which we know what happens every time we see, not every time, but many times we see a stock move up over that 50-day moving average. It's like a little kickstart for it. It's up 3% today, but I think that there's definitely more meat on this bone. I mean, it corrected from $420, $420 a share. What would have made this better if it was $420.69, but $420.76 is where we got it. The previous high. When we get up over that 50-day moving average, and I think Goldman Sachs is going to continue to do extremely well. I'd be surprised if this wasn't one of the leading markets going into the end of the year and into the beginning of next year. So, we'll see what happens. But this is definitely an area that I would focus on if I was worried about, accelerated rate hikes or accelerated tapering, which I think again is kind of fast for the Fed to be doing this in about 6 months' time. But we'll see. I mean, at the end of the day, you can only do things that are in your control. And we can't control what the Fed's going to do or what they're not going to do. But we need to have a plan in what we do if this happens or that happens. Take charge of the things that you can control and don't worry about the things that you can't. And I think you'll be just fine. Having a solid plan. If you like that, give me your thoughts. Leave some comments down below. Certainly would appreciate, your thoughts on it. Whether you agree or disagree, I don't care. Let me know. Let's have a conversation about it.